Môre Annet, hoe gaan met jou?
Goeiemôre, goed en jy van?
Fantasties. Annet, ek en jy werk al omtrent seker 2 jaar saam in verband met bond origination en so aan. En
Dis
ek het nog
reg.
eens 'n goeie idee dat ons met mense kan gesels in verband hoekom dit baie belangrik het is om met 'n bond originator te werk. So kan ek jou vra, gee vir my 'n bietjie van jou agtergrond, want ek weet jy kom van die bankwese af, dat mense kan verstaan dat hoekom dit baie belangrik is dat mense weet hoe om met bond richards te werk. So I'm going to go into English because most people of the audience is English. So I'm going to say is, give me a bit of who Annet is as a bond originator.
Okay, I've been say nearly 2 years now at Multinet. I was previously at the attorney's firms, so I know the connection between the bond and the attorney's registration. Um, I, I'm very excited to work for Multinet because they are quite sufficient and they quickly with bond approvals.
Which is great. So one of the things is what I like to mention regarding bond origination is, why is it important to work with a bond originator?
Well, we more sufficient and quickly with the approval of the bonds, because if you send your application in today, tomorrow you start getting results from all the banks, and you don't need to run around to all the banks. If one bank decline you, then or your own bank decline you, you don't need to run around with the application again to other banks. We submit it to all the banks once off. So
Yeah.
it's very easy and very convenient for you to run around to find a bond from any other banks if your own banks or doesn't want to give you a bond. Or the best interest rate if you go to all the banks and see who's giving you the best interest rate.
And it is quite important what you said there. And I found that a lot of times, a lot of the buyers or people that are applying for um, a home loan and says, now I will use my own personal banker. But sometimes it's not good to use your own personal banker because, you know, we've had this one case, and I won't mention the bank, is that he's been banking for the last 25 years, but his interest was more what the bank's charging him, where the other banks would have given him, was prepared to give him a 1% to 1.5% a lesser interest. And that's what I see is it's not always to work with your personal banker. Always look at the opportunity with working with people like yourself, sharing the information through to the different banks. Is that correct what I say, Annette?
That is correct, because usually what we do, if your own bank doesn't give you the rate that you want, we try to match it with a better rate. We actually send that rate to the other banks and say, listen, here, can you better that rate? We've got that opportunity to do that. And I mean, banks want your business, so they will make the effort to give you a better rate to get your business.
I said, and one of the key things is, and I'm going to go back in and want to start with that first-time home buyer. They want to get into the property market, but they don't know how. Can you maybe explain, maybe with a person who wants to get into the property market, what do they need to get into the housing market or to qualify for a bond?
Well, your best thing is firstly do a credit check, because your credit check must, or your credit score must be clear. And you need to do a pre-approval. Otherwise, you're going to run around, search for a property, and then you find a property you don't qualify for it. And then you're wasting the agent and the seller's time. So the best thing is to firstly do your pre-qualification, do your credit check. If all clear, then you know for how much you can go and look for. that you qualify for. And then the next step that we do is when you find your property, then you need to do an OTP, an offer to purchase. You offer that seller what you actually qualify for, and then when all parties signed, then we do the finance for you. We send it to all the multiple banks, and they give you the correct rate. You get a first-time buyers get a 50% discount on attorney's bond registration fee. That's actually very nice. And then if you getting a salary between 3,500 up to 22,000, you can go for the FLIS government subsidy. That will cover your bond and your transfer cost. If you haven't got, mostly first-time buyers haven't got that cost that you must pay to register your bond. And if there is left on the FLISP, it goes back to your home loan and it reduces your repayment, monthly repayment. So it is actually very nice to start with a property, to buy a property, especially if you're first-time buyer.
Annette, it's so important what you just said there. First-time home buyers, you've got the FLISP, and you've also got a couple of key points I want to come, which came out what you just said. And a lot of listeners and consumers out there don't know this, is that you can get a government subsidy with FLISP. So it's from 3,000 up to 22,000 who can qualify for FLISP, but it has to have one dependent, which is great, which is also a way to assist that consumer. But also the person that might earn more than that, what is the cap? Is that 2.2 million where they give you 105% bond? Is that correct? Or is that 2 million?
That's correct. That's correct. 2.2 million, you get the cap. And there's various percentage that the banks give you, I mean, to cover mostly of your bond, but you have to qualify for it. For instance, if you buy for 450, you have to qualify for 450, but the 450 must include the extra money that you requesting. You have to qualify for the extra money too.
But you also mentioned what's quite interesting as well, and that's where I've come in and I've helped a lot of times with your cases as well, is with when a person does his credit report, all of a sudden the score might be good, but there might be certain listings on the bureau, which doesn't help the consumer. But what I found is, of being in the game for nearly over 30 years, understanding financial literacy, that I've found more than 65% of the information on the bureau is incorrect. Because of a credit provider selling a book, and a debt collector who purchased the book might list a person that debt could have been prescribed. And lots of times we resolve those matters, might not resolve it straight away. And that's why it's important to get a pre-approval done, because it's not hampering the agent's time or the seller's time. It's also taking that dream home away from you, because you put your heart and mind and soul into this dream home, and all of a sudden you don't qualify. And that's why it's very important to get pre-qualified through people like yourselves, that we can make sure that that person who qualifies, that we can secure that dream for him. Because by looking after that credit report and making sure everything is clean, just makes your life easier. It makes the consumer's lives easier. It makes the agent's life easier, as well as everybody, and everybody wins. Because sometimes we just have to make sure that when we get into a bond, that having people like you just to say, and this is where your problem lies, and this is where the pre-approval happens, that we can resolve the problem before it gets sent to the banks. What would you add on this, what the consumer can do to make his life easy, Annet?
Well, the best is first thing why we do the credit check, if you've got a problem on your credit record, then you can see what you can work on to sort it out, to clear your account, because the banks will decline your application immediately if you've got any problem on your credit record, because your credit record says how do you pay your accounts. And if you've got a bad credit record, the banks won't allow it, because they will realize, okay, no, this person's got a bad credit record, they don't pay their accounts on time, then we can't give them a bond because they're not going to pay it's actually a risk. They're going to realize, okay, no, you can't pay your installment maybe because you're already raising other accounts. So it's the best is to fix your accounts, and then well, you can actually wait. You must wait 2 years actually to get a bond, because you must be actually 2 years clear. But then there is some stages that they can realize, okay, 6 months. 6 months, you must be clear on your credit record, and then if anything is in order, you can also give them paid up letters and everything. They will be lenient on it. Depends on the bond.
And Annet, you're 100% correct, where people just give up. And 2 years might be gone, 6 months might be gone, because a lot of times a person might deal with, doesn't matter if it's going for a bond or a car, they are purely looking at the credit report, but not realizing that the credit report could be challenged. And what's important, what I'm saying here, is myself understanding the National Credit Act like the back of my hand. Section 70 of the National Credit Act to 73 says, you're allowed to challenge your credit report. You've got 20 working days, or the credit bureaus has got 20 working days to sort out that problem. So there could be a prescribed date, or there might be interest that's not on your account, or there could be not updated paid up letters and the credit score is wrong. The credit bureau has got 20 days to rectify it. If not, they can be taken on by the ombudsman. And through this, we can help a lot of consumers who thought they cannot decline because of the 2-year process. We've got people through in 6 weeks. I've got people through in 2 months. It's all got to do by understanding your credit report and making sure that the information is very important. It's just like last week, Annette, I don't know if I told you this story. A client phoned me and she had a fraud case on her credit bureau report. And she couldn't understand that, because the fraud was not her fraud, as somebody else used the card through a retail store, which was duplicated as a fraud, and they put the wrong entry in. I had to challenge it, and they had to reverse it because it was on the opposite side of the other person using the card of putting the fraud on. So these are little challenges, because it's human error where people are just clicking the button. At least I got that result and she qualified for a car. You know, which brings me back to another point. A lot of us, we've seen, or working in the market with the people in home loans or finance, we've seen a lot of people that's under debt review. And people don't even realize they're under debt review. How many times have you come across a client that's under debt review and it says, I'm not under debt review? You know, and and what does the banks do when they see a debt review case?
They immediately decline it.
Okay.
They do.
And you know, we take, for instance, one of two of the clients that we worked with, we figured out that the debt review removal was done, but was never updated to the credit bureaus. And that's where we've come in and we removed that debt review status. And sometimes it just takes 10 days and we got them qualified. And that's what's important.
Sorry, Ron. Another thing also, you must also make sure, if you've been on debt review, please ask the bank to remove your risk also. Most of the times the banks doesn't remove your risk, and then that will be also a problem.
It's very important what you mentioned there, Annette. I don't know if a lot of the consumers know. In the banks, they've got an internal credit bureau called joint banks. So even if it's been uplifted by Experian or TransUnion or XTS, doesn't mean it's been uplifted by joint banks. And that's where we come in, because we've got the know-how to get that status removed. And it takes 2 or 3 calls, and sometimes it's difficult to get to the right person, but we can resolve those matters for people to qualify for home loans.
That's correct.
You know, the other point is what I would like to mention to Annette is that, and I like working with you, is how important is feedback back to that consumer?
Very, very important. Because everybody must be on the same page. Most definitely.
And, I just take, for instance, I'm going back to, and I won't mention the name of the specific client. And I spoke to you, I think, last week. It says, did you know Mr. So-and-so, who was listed last year, his name is clear. He's now qualified. We got him pre-approved. And it was because of you being in touch with him on a regular basis, of sending him, hello, how are you? How are you doing? And through that, they keep responding because of your feedback, Annette, as a bond originator, and telling people what's actually happening, or just saying happy birthday, whatever that is. And that consumer relates to you of giving that feedback, which you then give feedback to me, which creates a nice relationship between you and I, to build a relationship of keeping that client happy, keeping him safe, and guiding him into the right direction. So I just want to say thank you very much for that.
Thank you. And then another thing what I also do, I just don't leave you alone after the bond's been approved and it's went to the attorneys. I keep track with you and the attorneys until registered. Even though after registration, I would like to confirm if you're happy with the property, if all in order, if you need any further assistance with anything running with your bond, then I will most definitely help you.
And it's so important with that feedback to the consumer. At least he knows where he stands. Because at the end of the day, Annette, is, and I say, an average consumer becomes a buyer and a seller, and the seller becomes a buyer. An average person will do 4 to 5 deals in their lifetime. And if you look after them, you've got a passive income coming through by providing that service. And that's which is great about you, of providing that service, of giving feedback to that consumer. When interest rates go up, you tell them what's actually happening. You know, uh, and that's quite important. So just getting onto the interest rates, why is it important to notify the client on that drop of interest rates or interest rates increasing?
Well, most definitely it is working on your bond installment. If it goes up, your installment will go up. If it goes down, your installment go down. But I prefer that you keep your installment on a rate that you've been given. Even though it went down, you rather keep it on the rate that you've got, to decrease your monthly or your yearly interest.
No, 100%. And you know what's important, what you mentioned there, Annette, and I'm going to just use thumbs up figures. Let's say, for instance, you took a bond of R1 million over 25 years. and the interest rate was, let's call it 12%. 2 years later, it dropped down by 3%. And let's say, for instance, on your bond repayment, you saved nearly 500 Rand a month. Times that 500 Rand a month of the period of the 20 or 25 years. Look how much interest you have saved by keeping your installment the same. Because
Correct.
instead of paying over 25 years, that can maybe reduce your term to 17 years. So that
Correct.
is important, what you just mentioned there, of having that bond, of not putting the money extra in your pocket. Because I just done another YouTube video of you'll always be a slave to the creditor. Rather become the creditor, pay off it as quick as possible that you can have liquid capital. Or if you can pay off that bond and you want to put a double garage in, at least you can use that as an access facility in 5 years' time to build that double garage to put more value in your house. So that we'll go into more of a deeper dive in your next episode regarding this. So this is what this podcast is purely stated of working with Annet on how to grow your property portfolio working with a bond originator. So Annet, the next thing what I'd like to mention is when the person purchases a property, why is it important to look at the marital status? Some people are married ANC, some people are married in community, some people are married in tribal law. If you can maybe break that down, because a lot of consumers will say, my wife doesn't know I'm buying a property. Meantime, he's married in community of property. So when it goes through everything, all of a sudden, everything falls flat.
Yes, in community of property, you actually own 50% from everything that you own between you and your wife. That is common law, actually. If you married in community property, you have to register the property in both names, because if anything happens, you divorce, or one of you deceased, then there's a problem in a sense of then you need to sort out the situation that you married in community property. The property was only registered in one name, then that other person have to re-register the property in your name and pay unnecessary money. It's more convenient also, because the law is that you own 50% of each other, and the banks won't allow you to purchase on your own. ANC, you are welcome to do it on your own, because you've got a contract to say I own my things and you own your things. So that will be sufficient to do it on your own. The tribal law, that is actually basically you single. You can also do it on your own.
Fantastic. But one thing you mentioned now with the ANC, I can buy it in my own name. So one of the things is what I would like to suggest to the buyers or the consumers out there, before you get married, marry ANC with a contract. And the reason for that is it's not because of my money is my money and her money is her money. If you're going to take a risk, and at least you've always got a clean name. If you want to go into business and the business fails and your wife or spouse is working, at least you're still covered. Sometimes it's better to have two properties, but we can go into all of that. So it's very important as people getting married, rather marry ANC than in community of property. And I found it so many times that that buyers and sellers or consumers get married. They marry for love, but they never marry to see what's on the credit bureau. And sometimes when you marry in community of property, you're marrying into debt as well. So we need to be very careful of what we get ourselves into. And that can hamper your growth. And these are things that we're going to touch base on in the next couple of episodes with Annet, which will happen every Tuesday morning around more or less this time, which you can tune in. You can tune into our Facebook page, and so on. So I thought I'll just introduce Annet Mendes of working in the bond originating market, and we'll break down every little thing in bond origination to see what is the best option for you as a consumer. So in closing, Annet, I would like to ask you to give maybe 5 practical steps for a consumer who wants to get into the bond market.
Well, firstly, what I suggest is it is a good investment for future references. If you want to buy or sell, it's a very good investment to get into the market. It is a good thing to have a good credit record, running your credit record, especially for you yourself, the bank, and your record. And everybody needs a home. Yeah.
Yeah. So, Annette, thanks a lot. But there's also one important thing what we didn't mention. You might have the best credit record. Score might be at 750 or 800. But if you've got an unpaid on your bank account, especially a check account or a credit card, it's worse than a bad credit report. Secondly, stay away from cash loans. The banks won't give you a bond if you're running with cash loans. So get away from cash loans where you won't qualify, even if you got a good report. So, Annette, I just want to say thank you very much for this 20 minutes. Much appreciated. It was a great episode, and let's touch base next week and let's break down the different ways of qualifying for a home loan, what to look out for, and break it down in more defined method of how to help consumers to become homeowners. On that note,